Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for July 19th, 2016. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap Futures. Each morning we get together in these live sessions to go over the market, macro to micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. If you're interested in checking out the subscription part of this room, just send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. This is a group of retail traders operating within a self-organized learning environment. And we do these live sessions, and then we do live trading and analysis during the course of the RTH session. So yesterday, our main hypothesis was a open auction in range, a move down to somewhere between 54 and 51, maybe even 49. Find initiative buyers down here and then rotate up through the value area and through the range of the prior day, and then head towards that all-time high that was put in Globex at 2168. We didn't get much range. We basically had a 10.25 point range, but Hypo 1 did play out where we did come down, find buyers, and rotate up. Just they stalled out and went sideways. You can see that we did not have any OTF participation. We only had 750,000 contracts traded, so well below the normal volume on the day. And without, as we know, without OTF participation, we cannot get vertical development. So we got horizontal rotational development. We are anticipating that. I just thought we would get a little bit of range. Okay, so taking a look at the news, we had building permits and housing starts, and they both came in with just a hit or a slight beat, but nothing major. 10:05, we've got Great Britain, broadband speaking. I don't think that's going to be big, and basically that's it. What we are in is we are smack dab in the middle of earnings season, and we've got a lot of earnings coming out. We actually had a fair amount of earnings today. Most of the earnings looks like they're pretty decent, especially the financial sector. I mean, Goldman Sachs, they just crushed it. But there's the growth is still not there, but everybody's there's not too many misses as of so far within the earnings seasons. Each morning I like to start with a basic candlestick chart with a 9 EMA and a 20 SMA, and start on the monthly and start working my way down. And what I'm looking for is I'm looking for slope and separation of the 9 and the 20, strength of the trend, and where the trend is being violated, to give me an idea of where we are within the trends of the different time frames. So you can see we've had this wonderful uptrend, and then end of 2015, beginning of 2016, we violated the trend, but now they popped back up above the trend, put in a new all-time high, and we're starting to see the possibility of a continuation pattern on the trend in the monthly. And with the earnings doing well, we could see a pretty strong trend start back up as a continuation pattern. On the weekly, we're still waiting to see if this weekly pattern plays out, but we've got a foo bar, you've got a volume spike with a selling wick, and then you get the inside bar. So far, we still are only 2 days into the week. And then we've got this technical gap, and the tech gap isn't closed until we get down near the 2102.75. I'm looking at that 2104.50 as the possibility of where we're going to close this gap. Maybe the 2108.50, but we have to wait for the pattern to play out. What we do have is we do have slope and separation. So we are in a very strong trend on the weekly and nowhere close to violating it on that time frame. Same thing on the daily. We've got good slope, got good separation. We did get a little bit of an inside bar. There's no foo bar, but we do have a technical gap. A move down to close that gap is going to bring us down to the 21.38 1/4. 21.38 1/4 is our key line in the sand. It remains to be our key line in the sand. Below that, I'm looking for a bigger move back towards that 21.04 area. Going to the intraday, you see on the 4-hour, we're basically in consolidation mode. We did break below the 9 and the 20, but we're coming back up and testing it again. Very tight range overnight. Basically, we have a 10-point range in the Globex, basically right in balance of where we were over the course of yesterday's RTH session. And going to the 30-minute, you can see that we did get a start of a downward trend, but now they've taken it back and they're trying to hold above the 9 and the 20, so they're violating and challenging the downward trend. We held the 9 at 21.54, so we could change this trend. Now on the 15-minute, there is a declining, broadening wedge. If I put some trend lines in here, I posted this in the chat room. I'm going to put it here, and then shows it much better on the bottom because we've got our 3 touches. You're looking for 3 touches of each bar. We've only got 2 touches so far, but a break. This is generally a bullish pattern. A break above this could give us a measured move, and just to give it a the measured move would be up to 21.61 on the primary and 21.63 1/4 on the extended, based on the current formation. But that is, you can't measure it until it breaks out, of course, and completes the pattern. But in any regards, we do have a possible bullish pattern on the 15-minute. We are above the 9 and the 20. We do have some slope or some separation. We don't have a lot of slope yet. Just keep an eye on this 55 area. If we can hold above the 55, then I'd be looking for this continuation and the breakout of that broadening wedge. Going to the 5-minute, again, more consolidation. We just are struggling with the 9 and the 20 right now, but the trend right now is still up, and I would watch this trend line here. What does that bring us down to? 50, roughly about 54. Not a trend line I had on my chart, but it is going to be around 54. So watch that carefully. Okay, taking a look at the structure. Now, yesterday was a P-shaped profile. A P-shaped profile is short covering. It usually follows a couple down days. You can see we had a couple down days, and then we've got the P-shaped profile from yesterday. That generally shows a continuation of the downward momentum in the next couple sessions, but it doesn't have to be this session. Right now we're trading inside of this microcomposite. The value area low is 56 1/4. Watch that. If we get above that, then I'd be looking for that move back into the naked VPOC from yesterday at 61 and the microcomposite 3-day VPOC up at 60 with the naked close at 59.50. If we can't get back inside of this value, you can see that there's a little bit of a, move this over here, there's a little bit of a distribution zone below the 56, and the HVN is down here at 54.50. 54.50. So I'd be looking for a move down to 54.50 to see if we can pick up buyers. If that doesn't hold, then look for them to come all the way down. Okay, we're pretty thin up here, down to this 49.25. And 49.25 is going to be our warning line for a move back down to the last 2-day microcomposite VPOC, which is at 46. And this is a pretty prominent price acceptance here at 46. And then, of course, our key line in the sand at 38.25. If we get below that, then I'm looking to come down here and fill some of these gaps and come back towards this. It was 21.0450. It's shifted to 21.0650. So there's the 08 and the 0650 with 03.25 as the lower side of that balance, and that would take us back into this gap zone right here, and might likely bring us back down into the next big target below, which is going to be down here at 2087. This is where we accepted price after the breakout of this longer time frame balance area that we've been in from March through to the breakout and back into this distribution zone that still has a lot of repair to be done down here, but that's not going to be in the cards today. So basically, watch the 49, watch the 56. That is going to guide us this morning. Below 49, look for a move down to 46, maybe even 43. 38 is our key line in sand. Below that, we've got lots of targets below, and we'll talk about that. So let's take a look at the overnight. So our overnight high is 61. Basically right at yesterday's VPOC. Our low is 51.25. And that is below. We left that naked close by 1 tick yesterday. And then our VPOC, overnight VPOC, is 55.50. Here we are coming down to that 54.50. We did not hold the 55s. And there's an LVN here at 58.25. It's right at the value area low, so that's going to be an important level for us today. And then there's really not much more information that the overnight session gives us. So let's just move this over and expand this out. So let's get our levels in here. We're going to be opening auction out of value but inside of range. There is this small LVN at 54.50, and it's a microcomposite HVN. I'm going to be using that as a trade level below it. I'm looking for a move down to test the range low and take out this naked close at 52.50, and then possibly come down and take out the overnight low and at 51.25. The 49 obviously remains a key warning line. And our main target below for the day is down here at 46 area, and that's the microcomposite VPOC. It's the naked VPOC. You got a naked close down here, and then 43 is where the buyers have been stepping in and holding us, and then below the 43 we've got the 38.25. Our daily ATR is running 31.11. But that also includes a outlier, which is the Brexit day, which was 120.5 points. So I've taken the 120.5 point out to recalculate the 20-period ATR. I'm actually using a 19-period ATR, and that is 26.40. You can use the 3111, but with the tight range and the low volume, taking the outlier in makes more sense. So based on the overnight high at 2161, take off 2640, and that gives us a daily downside target down here at 36. And we've got the 33.75 and 30.50 down here as well, with 26 and a quarter as a little bit of support. And then below that, we've got a lot of repair work down in this area in the 15 to 10 area. And basically, the naked single that's still down there, there's a couple of them, but more importantly, the return to the 50% of the significant breakout candle, which we have not retested, and that's coming down into this candle right here. So anything below 38, I'm really targeting down here in this area down here, anywhere from 15 down to that 0650. But I just don't think we're going to get there today. So those are the levels to the downside. To the upside, obviously, we've got the value area low at 58.50. You should watch the 56.50, but it's a little bit tight. And I think once we get, if we hold this 54 and we find buyers down here, we're likely to at least come up and test the 58.50. Above the value area, 58.50, it's all about the overnight high and the naked VPOC, especially if we leave this overnight low alone. And then the value area above is at 62. Our RTH, and I'm going to expand that from 62 up to 62.50 because of the range high from yesterday. And then above that, you really want to be long because we've got the RTH all-time high at 64 and a quarter, and then we've got the all-time high at 21.68, and not much else up there. And if they get above yesterday's range, more importantly above Friday's range high, which was the 64 and a quarter, which put the all-time high in the RTH. But the fact that we have unequalized highs between the RTH session and the Globex session, through history, we have had very low probability of not going up and testing the Globex all-time high in the RTH session. So I'll be looking for a move up into 2168. And then we've got the 75. Our daily upside target is moved down from that 81.50 down to 77.75. And then we've got that measured move at 88.50. And then 2200. Our weekly ATR is still running up here at 2207 and a quarter. So in terms of levels, those are it. We're seeing some more weakness. We're having trouble holding this 54. So my main hypothesis for the day is an open auction in range, a move down into the 51 to 49, maybe the 46, find responsive buyers down here, and then rotate up through and come up into the kurtosis, the VPOC from yesterday, and chop around in this area and maybe test the 64 and a quarter. I'm expecting another tight day with low volume. We're in the midst of summer, and so my main hypothesis is a rotational day, but finding buyers down somewhere between the 51.49, maybe even 46, and then rotate back up. That's hypo 1. Hypo 2, opposite, open auction, in range, a move up to test the value area, maybe up into the naked VPOC, take out the naked close, fail to break out or get a false breakout, and then find responsive sellers, and then rotate down into this 46 area. So pretty much the opposite. And again, like yesterday, the way we're trading right now on low volume, there's, the hypo 1 and hypo 2 are almost interchangeable in terms of which weight that I'm going to put to them in terms of, what I think is the most, likely. Based on, normal auction, we should, continue this move up and get continuation of the move up. But we are getting exhaustion, and we do have a P-shaped profile, so I have to be wary and not get long biased. And if the market is showing me that it's a short, then I flip over to my secondary hypothesis. Hypo 3 is a open auction in range, a push down into the 52 to 49, and then get failure and push through the 46, pause, and then get another continuation down towards the 34, 36 area, and testing the key line in the sand. So basically a pullback day and a continuation back to fill in some of this area and fill in this first gap that we've got in around the 33, 34 area. So Hypo 3 is an open auction, a push down, chop around, and then get continuation, chop around, and then get continuation and a push down. And then Hypo 4 is an open auction in range, fail to take out the overnight low, hold the range low at 52.75, rotate up into the 61, chop there, and then get continuation up and go up and put in a new all-time high, and possibly come up into the 75 to 77, 75 area. So those are my 4 main hypotheses. Take a quick look at where we are in the Keltner. Keltner center line is 54.75. A move down to the lower Keltner, if we can't get above it, takes us down into that 48, 49 area, and testing that warning line. A move back above the Keltner and a move to test the upper Keltner line is going to take us up into that 61. So you can see we're pretty much in balance right now, and chopping around the overnight VPOC and holding the value area. The Globex value area low is 53, so that could be a good sign whether or not we hold that value area and rotate back up through the Keltner center line and up towards that 55.50 and continuation up into the 61. I'm not going to do gold today. I've got to run out right now. I'm going to try to be back for the open, so I'm going to try to cut this short so I can attempt to do that. So as always, trade well, trade safe, and we'll catch you on the flip side.